Welcome live, gentlemen. Everybody's got their cups, their mugs, their glass, their stein, their vessel of any kind, as Scott Adams always says. Yeah, we're trying something new today. We got Greg's got his headset working because I got a call from a guy last week said I love listening to your show. Matter of fact, I listen to it every week on lumber, but he goes, sometimes there's so much background noise. Can you guys mic up or do something? So per everybody's request, Matt's got his headset on, Greg's got his, I got mine. I got blue Yeti going right now.
Expense report.
Yeah, blue Yeti, man. Those things are they're crazy. It was tough backpacking that thing in this morning. It's a little bit big. So wait for a few people to roll in. So this is the Materials Exchange episode 17, guys. Number 17 of the
is it 17 or 18?
Maybe
when do I get my check?
Let's go.
I still haven't got my first paycheck for this.
It's like YouTube, Matt. We got to wait to get a certain amount of users. I'm gonna say it's episode 18 of the MX Broadcasting Network.
People pay thousands of dollars for this information. We're giving it away for free, baby.
Oh, dude, I was talking to some people yesterday about it, and they're like, "You should do this with some investors, right?"
Yeah.
So the interesting thing too, while we were doing this, so I've done a couple of educational things on LinkedIn and YouTube where I just talk about what does futures mean on a delivered price per dollar per foot. If it delivered on 4 trucks to your job site, if you took delivery, things gotten like 1,000 some hits, all kinds of things. I did one about the supply chain last Saturday about mills, end users, and the 30 people in the middle of the chain and how they touch everybody. That thing's gotten like 2,000 hits. Here's what's crazy. What you and I take and Greg take as just basic. We think it's common. It's not even worth talking about. You tell people that stuff and they're like, oh my God, I learned so much about, I didn't know lumber transacted that way. I didn't know so many people touched it in the middle, right?
Wait until they find out that only about 20 people control the entire futures board, and I know half of them.
Yeah, that's true. That's true price discovery, huh?
Yeah.
All right. Well, real quick, again, welcome to Materials Exchange. We think we have enough people on. We'll start out now. If you want to say where you're from, who you are, you can put it in the comments. We'll see it. Ask any questions during this. Kind of the theme today. This is the second week. We're all back. Kind of wanted to talk about interesting week last week and price discovery all over the place. A lot of interesting announcements coming out. Futures were limit down yesterday. So, Greg, where are we and how did we get here?
Well, I mean, I think the market's beginning the process of trying to see if it's going to bottom out. We talked last week. We fell $1,200 in 9 weeks. Last week was the first up week in futures market. We're going to have an up week in Western Spruce print this week. So, we've begun the process, but there was a lot of there's a lot's happened. And I was kind of thinking like, how'd we get here? And I think back of, in March when the market was basically sideways for about 4 or 5 weeks, and then we had this $500-600 run up, which was driven by massive inventory accumulation, speculation, hoarding, FOMO, and what turned the market was what we were talking about back in the first quarter, Matt, you and I, was that with vaccine, the home center business was going to slow. And in fact, that started in April, and it really wasn't apparent to the rest of the market until mid-late May. And that extra supply was really what tipped the market over.
You guys actually did mention. You guys actually both mentioned that early April before anybody else knew what that even meant.
Right.
It had an impact.
Yeah, and now we've got this, the flip side of what we had there those the last few weeks of late April, early May, we've got massive inventory liquidation through the pipeline. All of these people that bought more lumber than they needed for their immediate needs, and or we talked about a Habitat for Humanity. Hey, we bought all the lumber we're going to need for the rest of the year. So we're chewing through all that inventory, and while business is still at a relatively robust pace, that inventory liquidation, there's that much less buying at the mill level, day over day, week over week.
Yeah, Greg. Yeah, go ahead, Matt.
To Greg, what inning do you think we're in terms of like inventory liquidation? You think we're in the second inning or the seventh inning? I mean, just what's your opinion?
We're probably more like I think it's a seventh inning stretch right now. I think we're in the seventh inning stretch. I think there's probably a solid 2 to 4 weeks more of net inventory liquidation. Yeah, that's my general sense.
Matt, what are your feelings where we are? How do we get here?
Well, I think there's a number of different factors. I mean, I could bore you for 5 minutes with this, but I mean,
did I bore you, Matt? Is that what you just told me? Did you just
No. Did you notice that when you first started talking, I was distracted by my little computer here, but then you said something that caught my attention, and I sat there and paid close attention to you for the last 3 minutes. No, you did not bore me. No, I mean, mills have some extra inventory right now, and that's what's causing some curtailments, right? I mean, it's not being published or anything, but we've got a couple mills down this week, and we might have to shut down another mill. We have a mill that we contract with that burned down overnight, so that's not good at all. I mean, it's completely gone. Like, the mill is ash. So fires are.
Is the planer still running?
Yeah, our order file is now 2 or 3 years or sooner. We'll get back to you when it's going to ship. But I mean, that's probably going to be the end of that mill unless they can get insurance money and rebuild. You're still talking, it's a couple of years to rebuild a sawmill. It doesn't just happen like next month. So, fires are real in my neighborhood here. I mean, fires are a real potential that for the first time in, fiscal year 2021, I'm actually nervous about, having to evacuate. Hasn't happened yet, but the neighborhood that we just moved into last September, they had to evacuate because the fires got that close to Portland. So I'm in a fire-prone area. Where I live now is not in Portland anymore. It's in the suburbs, and I'm surrounded by forests. And one of our mills just burned to the ground overnight. Maybe I don't want to mess around with the downside of this thing much longer. You know what I mean? And knowing that mills are willing to shut down at this point because either they have too much inventory or they don't like the sales price, and they just figure, hey, I'll pay my employees for 2 weeks to go on vacation. It'll be cheaper than forcing all this lumber into the market, at some negative price. They have options. They also have a lot of money. I mean, the mills have made a lot of money in the year, and that gives them the opportunity to make some hard decisions that they might not want to make in a normal year, right? They can actually afford to make some of these decisions now. So I look at that. I look at the big box business is probably going to improve. We're starting to see improvement in our takeaway numbers already in August. I mean, it's not even August, but typically that doesn't happen until after Labor Day, where you really hit your stride. We're already starting to see a reversal in the takeaway with the home center biz. I'm sure that the treaters are going to eventually have to come back in and start buying. I know that there's a big segment of the marketplace that's actively buying lumber right now and wants to lock in prices for the rest of the year, and that would be your job shipper type guys, the guys that sold the apartment jobs and they want to cover now. So
and they have been covering.
Yes, they have been. They're actively issuing orders, and they want to keep issuing more orders because they have a lot of work in front of them.
Yeah.
So I'm kind of beyond the hey, woe is me attitude that I've been feeling for the last 6 weeks, and now I'm starting to feel optimistic again that we're going to actually get back into kind of a normal give and take between the sawmills and the customers, and that things are slowly working themselves out. So we talk about price. Greg was spot on back in May. He's like, hey, you can still buy lumber. You just got to pay for it, right?
Yeah.
Well, high prices slow down business. Low prices attract new business. And we're in that process now of the low prices that we've reached, which, I mean, they don't seem low historically, but they're definitely low for the year. We're back at like November of 2020 prices. So now, if you're an investor, a lumber speculator, your downside risk is $100 or $200, and your upside, based on recent history, was $1,200 higher than that. Well, which I highly doubt we'll ever get back to that, but we could certainly go up a couple $300 easily.
Interesting question, Matt. So yeah, some people are buying. From what we get and we see on the platform is people that never saw it before. There's a lot of builders in the chain that haven't seen much price from their providers. They haven't seen 400 and some dollar, 450 per mil 2x4, or $600 1,000 or $500 1,000 2x4 9-footers. Their yards are still quoting them what they were quoting them a month and a half ago.
But Ash, they're never, end users are never going to see those prices because
some of them went out to smaller guys and found them, though. That's what I'm saying, right? I mean, but in some areas are just locked in because there's been so much consolidation. People, why people don't lower prices? They don't have to.
Right. Yeah. Oh, and to your point, one of the advantages of materials exchange is that it opens up a whole new world to a whole group of lumber buyers. I mean, not only are you, taking not only are you bringing a technology to the marketplace, but you're also disintermediating everybody.
Oh, whoa. Can
yeah,
that's
you included, Matt. He's disintermediating you too.
But you know what?
Matt, you know what, Matt? You're okay with that because you are agile, mobile, nimble guy. You can always figure out, Matt.
You guys are
add value. There's no worry.
You guys are top step pit traders. So you're the ones that actually acclimated to the digital before the pits closed, right? Now you're just
what Greg was saying about what you were saying, Ashley, about some of the builders aren't seeing price relief. Imagine the conversations going back and forth between the large national dealers and the large national builders about what the proper price of lumber should be in the third and fourth quarter, based on what happened in the first 2 quarters of the year. I would love to be a fly on the wall during those discussions because I imagine they're pretty tense,
I have a thought on that, and one of them is, it's kind of a tough situation because I know there was, a long period of time where the message from big builders and medium builders, anybody, was, hey, don't run out. I really need product.
Absolutely.
Right? So
that's
really
for sure.
hard now to turn around and go, hey, the market's down 65%. Cut your price. I mean,
but they also went from 120-day pricing to 30-day pricing, right? So now the builder's like, hey, you're at 30-day pricing. I want that 30-day index average, right?
Right.
It's back to something we talked about last week, which was when you have the unprecedented move that we've had in the last 12 months. It's exposed all sorts of, I'm going to say, I don't know if it's inefficiencies as much as it is, problems with the way product flows through supply chain. And, what are the changes? What changes is that going to precipitate? That's, that's kind of like one of my questions. Can we talk about new home sales, Ash?
Yeah, let's talk about that because you had you got on the call, you had some really great points to that. New home sales. So where are they at? Why did they slow? And the rate, you had some great points you wanted to follow up on that.
Well, so year to date, new home sales are up 13.5%. But as you pointed out, Ash, you look at that spike last summer in the rate, and what's happened so far this year is we've basically kind of come back to trend. And, why is that? Well, number one is when we spiked, we cleared out all of the inventory. And for the last, I don't know how many months, the inventory of homes for sale has been at record low. It's now up to 6.3 months, which is getting more like basically kind of quote unquote average. The other thing I saw interesting was last month that 1/3 of all of the homes that were sold last month, actually more than a third, 35%, we're not even started yet. So you figure right now, if you buy a home that isn't started, you're sometime like maybe late fourth quarter or maybe first quarter of 2022 delivery.
So 1/3 of all the homes sold last month,
yes,
weren't even started yet.
right.
That has to be that has to be one of the highest stats, like on that, comparing month over month.
Yeah, I don't know. I'll check that out and get that for you.
A great point.
One of the other things that's affecting home sales is you saw it. Biggest price increase. Median home price hits a new all-time high, and it's up 14% year over year. Is that right? Up 23. Median home price in June was up 23% from a year earlier to a record high. So, the home sales have been affected by low inventory and the prices going up substantially. So that's going to be an issue.
Matt, what do you think?
I'm just curious how that ties in with these existing home sales. So, in Portland, I have a realtor buddy, and I talk to him regularly. Yesterday, I talked to him. He said we went from 2.5 buyers for every one listing to 1.5 buyers for every one listing in the Portland metro area. And he said prices are still on an upward trend. The frenzy that we were seeing in March and April when I sold my house is not quite the same. There's people are still being a little bit more measured because they have more options in terms of existing homes and new homes. So if you add those two things together, inventory available for sale, alluding to Greg's previous comment that everything's for sale at some point. So I'm seeing in the Portland market, more existing homes are coming on the market to satisfy the surge in demand that we've seen in Oregon. And a lot of people are moving to Oregon, believe it or not, from places like California, Ohio, Illinois. There's a lot of people wanting to come out here for whatever reason and set up roots. And it kind of blows me away, but that's true.
Here's one thing I noticed. I was at the bank the other day doing some stuff, and the banker's like, "Hey, you want to refinance?" I'm like, "Huh?" I'm like, what? I'm like, what? Why? He goes, well, we can get you in on a 7-year ARM at like 2.5%. That was his initial offer out of the gate. I'm like, a 7-year ARM. So I intuitively thought rates were going up. I guess rates are still, and then I even heard lower than that on a 10-year ARM. So
yeah,
I guess how are rates affecting it, Greg, right now? I guess refis must be starting to move up again, right?
I'll have to look and see. I haven't. I think last week that the mortgage index was better. But yeah, the most amazing thing that we've had is that the 10-year has gone from, a high in March of like 1.7 to I think it's 1.3 today.
Yeah.
And so yeah, lower mortgage rates kind of there's a little bit of offset to the higher prices, but
yeah.
Rates are not the issue.
So let's talk a little bit about price discovery. And Greg, this is kind of your idea when we first came on. So the best place to get transparent pricing right now is the CME, right? Because it's something you can look at every day and get transparent pricing, but it's for a small item. But you brought a great point up. The disparity of pricing. So there's the index price, which when you're in a volatile market like this, you had Western Spruce last week or 2 weeks ago trade down to 400, and then Mills raised the price to 550, right? And then the CME goes a huge premium. So let's hold that one in the tank for a second. We'll talk about that premium and how we kept looking at saying, what's going to happen to that premium? Well, I think we're seeing what's going to happen to that right now. The other thing is there's such a disparity in price discovery between mills in the same species right now, right? which is, Greg, you threw out the thing $100 in some cases between what one mill is selling at versus another one. That's just price discovery, and that means we're really working through some things. Does that make sense, Matt?
Yeah, for sure. Because every mill has a different set of circumstances to deal with. Some mills have already curtailed production, so they might not have a lot of floor stock to worry about. Other mills might have empty cars in the backyard and piles of lumber laying around that they haven't been able to sell. So if you figure that out, if you're a trader and you're making your normal calls and you just ask questions like, hey, do you have something that is, a problem for you that I can work on? Maybe they'll tell you, hey, go sell some 2x8. I'll guarantee you it's going to be 2x8 something, because nobody's really buying 2x8 right now.
Yeah.
But anyhow, I mean, it's like a normal market, really, because even in the best markets and the worst markets, you can have those conversations with your sawmills. That's no different from normal, really.
Yeah. No, Greg, and you brought the point up about we've been talking about it, even Matt, for like a week. Look at that. Look at that basis. Look at that basis. What's going to happen to that basis? And all of a sudden, you're like, damn it! I wish I would have got more of that basis.
Basis is gone. Basis is gone. Yeah, well, I mean that's the crazy thing when you think the futures market bottomed a week ago Monday at $500, and on Friday hit a high of $700. So 5 days, futures went up $200 a thousand. We know that cash traded in the low 400s, 400, 420, whatever. But we talked about it last week. There was an opportunity for those people that are inclined, and as Matt said, had some bullets to spend, to lock in 100, 150. I mean, I don't know if anybody could, maybe even $200 a thousand, which historically has a pretty substantial return on investment.
But you had a good point last week too, Greg, where you said a lot of people had they were worn out from trying to continue. First of all, margin was high. Margin requirements are high. Second of all, if you wouldn't have done anything in the last 6 months, it looks good. But there's just looking at it, that snapshot. But people had what's the correct term? Were worn out or had Fatigue. There we go. I can't even think. Well, they had fatigue from it looks like a great trade, but I don't know what that means to me right now, because I've tried stuff in the last 6 months and some has worked, some hasn't, and it's a high stakes game, right?
Well, also chalk it up to summer doldrums too, right?
Trading is like, hey, if you basis trade, you want to lose money on your futures on your futures, because I mean, at least where I sit, I'm never 100% hedged. I'm always hedged. That's like some percentage. And so if I'm losing money on my futures, that means that the rest of my inventory has appreciated in value.
What do you mean? I thought you make it on both sides.
You've been talking to my money man. He's like, no, Greg, I want you to make it on both. I'm like, there's a lot of things that I want in life, and I don't get any of them.
No, you're actually, and on basis trades, you're right. You used to always say this, Greg. You should hope you're losing money and the market's moving, because that's how you get out of a basis trade, because then you have liquidity on the cash side of it.
Yeah.
Right?
Yeah. I mean, if you sell, let's say you're a hedger and not a basis trader, rarely do you actually just hedge all your inventory or even over 100% of your inventory. I mean, that's not really fiscally responsible to do that. And if you have any oversight, someone's going to raise a red flag if you're doing that consistently, because that's just speculation, right? But if you actually are a hedger and you, let's say you sold the market from 1,500 all the way down to 500, and at various different stages you kept selling the board and then kept trying to sell inventory, kept selling the board, kept selling inventory. When you add up all the dollars at the end of it, you're still going to lose money. You just won't lose as much money as you would have if you just gone completely naked, because none of us hedges 100% one-to-one. And if you actually go and force your lumber into the market by calling 20 guys and saying, give me offers, the offers you get are 50 below what's being printed or 100 below what's being printed. So you just have to take catastrophic losses on your actual cash inventory. Rarely do you pick up all that money and then some in the board on your hedges. Rarely. I mean, I bet I could list on my one hand in the last 28 years where I made as much money or more on the futures side of my hedging strategy than I did lose on my inventory. So you actually, Greg's right. If you're losing money on your hedges, your inventory, which is a bigger pile of product and risk, is now worth more to everybody. So it pays you to be to lose on the board, actually.
But, to bring that full circle, Ash, I mean, we had the huge, really probably the biggest premiums that I've ever seen, the board to the cash market. That's come in considerably now. It's still actually, what we
you're not talking from a dollars wise. We're talking from a percentage wise, right?
Right.
Because
and Matt and I can look at, the board right now and go based on our years in the business and say it's still a pretty decent premium to the current cash and probably a substantive premium to what some of the inventory purchases that we may have made in the last week.
So let's talk a little bit real quick about just if overvalued, undervalued. Greg, what overvalued, undervalued? What's your thought there for everybody listening today?
Undervalued right now is everything in 8 foot, particularly given that like most prices that there's something that's still highly counterable at the mill level. It is 8 foot. My suggestion right now is that whatever 8 foot product you're going to need for the next, if there's an item that you're going to go to your maximum inventory position over the next 2 or 3 weeks, that's what you should do, because we're at or below the cost of production on those items.
That's a good point.
And the downside, the net is really low.
Great. That's awesome.
The second that home centers flip the switch and start taking more, Matt's alluding to that maybe starting to happen. I heard some of the mills that had cut from home centers, I'm not trying to dial into, have cut back from cutting 8s and are trying to, if they can cut 9 footers. Now I know it depends on logs, but if they can cut 9s, they're cutting 9s instead of 8s. Yeah, I mean, hey, listen, it's a dynamic market, and the adjustments are made based on price level, relative demand, et cetera, et cetera.
What about
so from an undervalued standpoint,
8s?
That's what I would be looking to do.
How about overvalued?
Overvalued.
Then it could be anything. It could be panels.
Well, I'm going to talk about what we talk about all the time.
Yeah.
Commodity lumber. I'm going to say 2x6, 9 and 10 foot in spruce. And the reason I say that is because the biggest section of the market right now that is quote unquote still buying is multifamily, and there's a high propensity there to be able to switch species, and you see a lot of those guys going to pine on that product.
Yeah, we get 2x6 9s listed today on the MX platform at around 510-ish, maybe delivered to Atlanta area.
That's why I figured I'd lead with that for you.
Yeah. No, I mean that's and we've shipped that product all the way up to Nebraska and into the Midwest because people that were switching to Southern Pine 104 and 5/8 that traditionally use spruce.
Yeah.
How about you, Matt? Undervalued, overvalued?
Undervalued long lengths. Long lengths have completely deflated down to the price of 2 and better lumber. And so in your whole trading career, if you can buy any long lengths at around the commodity 2 and better price, fire away. That's undervalued. 8-foot lumber's undervalued. 10-foot lumber's undervalued. Those are historically consumed by the home center type big box people, and they're retail guys don't like them, but hey man, if you're trying to get your average cost down a little bit, you might fire off a PO for some 8s and 10s or heavy 8 and 10 type cars and save $100, $1,000 and bring your inventory averages down a little bit. So That's what I think. Overvalued right now, it's just 2x8, and it's not because 2x8 is overvalued. Really, it's just because there's too much 2x8 around in every species for the demand of it. And you've seen this before, Ashley. There was a long time ago, 20 years ago, I called you up and said, "Hey, Ashley, I just bought 8 cars of 2x16s and shoved them into Nolan. I bought them from Kruger." And you're like, "Oh, what'd you pay for them?" Like, we're all excited talking about the trade. And we both agreed that was a great trade because it was so much cheaper than everything else. You know what? Those cars sat in Detroit for 4 months.
Took a year to sell it.
Yeah, I was begging people to buy 2x16s from me for 4 months, and then finally they went away. But it's just 2x8's a really tricky thing. It's either white hot or it's dead. There's nothing in the middle.
Anything you try to do too many cars. I remember one time buying like 20 cars of 2x10 14s. Because they were the most undervalued thing you've seen, and they were. But first of all, once everybody finds out you have them, they're like, "Yeah, we'll give you a bid."
I remember. I think we shipped all that stuff like to the Northeast.
We did.
Chicago.
We did. It was great. Yeah. It's like, oh my gosh, the basis is all. Everything is great here. We're getting bids like $200 under the price.
This Beautiful. Is why that is exactly why when the price of lumber got, went up into the 1,200, 13, 14, 15, even higher. I was telling the guys that I'm responsible for at Hampton, look, I don't want you taking flyers on 2x8 16s. I don't want you buying green Hem-Fir long lengths. I don't want you buying anything that you can't personally sell yourself. And it better be the number 1 or 2 most liquid item in your quiver. If you're speculating on a bunch of expensive lumber that you have no clue where it's going to trade, you're making a huge mistake, and that's a gigantic gamble that you can't afford to lose. And thankfully, they listened, because we could have gotten just crushed in June and July with a bunch of extraneous, weird stuff shoved into reloads all over the country because nobody knew how to sell it. But we didn't do that, thank goodness. That was probably the best piece of advice that I gave anybody in the year 2021 was focus on what you're good at.
Yeah.
I mean, Matt, that brings us like kind of like where we kind of always end up with is like, hey, have a plan, stick with your plan. Don't be distracted by all the things that are going on, the noise in the marketplace, and you'll do just fine. Ash, we gotta roll.
Yeah, we got 12:30. Thanks, everybody. Appreciate it. We'll be back next Wednesday at this time tomorrow. Matt Lehman and I do lunch with lumbermen. We'll talk about some of the southern pine and some of the multifamily stuff. But Matt and Greg, it's been great as always. I appreciate you taking the time.
Thanks, Ash.
Thanks, guys. Have a good one.
Yep.